What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we'll go over the overall market, cover some hype sectors, hit you with some trade zones, update you on some old trade zones, and maybe some show and tell for the swing report, and that's pretty much it. So let us get into it. Okay, so starting off with SPY, all of this consolidation is healthy as long as we're holding over 565.16. That's the prior all-time high that's over here. And even if these sellers were able to get back under 565.16, these buyers would still be in pretty good standing as long as they can hold over the demand zone created in August 19th to the 30th over here. Okay, with its value area high at 562.02 and point of control at 560.79. I've also got this developing point of control and developing value area tool dropped onto this local daily range because, when you're dealing with just sideways right now, as we are right now, I should say, you don't really have that much to go with, right? Because as long as you're trading back and forth, you're trading sideways, it's balanced, it's two-way trade. Again, there's not really a lot of conviction either way. So what we can do, however, is to drop this developing VA and POC tool to assess which side is starting to edge out. So basically, whenever you're balancing, what should happen relative to the developing value area high and the developing value area low is that you should see multiple tests of the developing value area high and multiple tests of the developing value area low. I'm just going to start saying diva and deval from now on. And if these buyers can hold over the DPOC, the developing point of control, well then, of course, that's the best case scenario for these buyers. So as of right now, today we had that strong open. It was a big gap up though, and typically on large gap ups, you'll see some corrective activity off of the open, which is what we got. We corrected all the way back down, and if you'll notice what happened was these sellers failed to come and touch down on the developing value area low, the deval, of this local range. And then we ended up closing above the diva. So as long as we're holding over the diva, then value is moving higher relative to this local balance. That's the best case scenario for these buyers. So buyers are positioned really well for a go at another all-time high test at 574.71 next week, but you have to call it for what it is. We still are within this area of balance. So if we pop and drop over 574.71, it's right back to eyeing the diva, the DPOC, and the deval again to assess whether or not buyers can continue to stay constructive, I guess, relative to this balance. Okay, because the idea then is the last line in the sand is the DPOC, but the best case scenario is to hold over the diva. Okay, and again, this was a very notable failure for the sellers to not touch down on the deval. All right, let's moving on to the Qs here. So QQQ, pretty similar, slightly different. So there is some relative weakness in the sense that there is still this daily overhead supply in the way. However, within the local balance, you could say that there's actually relative strength in the QQQ and the NQ because you opened over the diva and then you did not see any follow through under the DPOC. Whereas the SPY, you saw a decent amount of follow through under the DPOC and a near miss of touching the deval. The QQQ held the DPOC much better, of course, then thus preventing a test of the deval as well. So a close over the diva means that these buyers are, rather, as long as we have acceptance over the diva, then buyers are moving value higher relative to all of this local balance. So the best case scenario going forward is to hold over the diva, which is at 486 and a quarter, call it. But the next best case scenario is to hold over the DPOC, 482.93. As long as they're holding over the DPOC, buyers will be positioned well to move value higher relative to this local range. And as long as they're holding over the diva, then they actually are moving value higher relative to this local range, and then that will have buyers confident in a test of 490.73 and the value area low of this key supply, 493.83, and then really what we care about is 496.29. That's the point of control of this supply here. Finding acceptance over 496.29 would affirm this structure as demand. Okay, if sellers were to enter the market, I still think that these buyers are in good defensive posture as long as they can maintain over this 815 to 830 structure, the value area high of which has held price multiple times. Okay. So that's pretty much it for the Qs. Moving on to IWM here. So IWM, a notable breakdown under this 216.27 level, which of course was also a break under 217.38, which is the point of control of this fellow over here. Got to hold over the point of control of 217.38 in order to affirm this structure as demand. Holding over this structure as demand leaves very, very little supply overhead. Just this, all of this price action above before an all-time high test in IWM. So a notable drop in pop under this point of control. And then you'll notice today's low of the day was made pretty much right off of that point of control, again, affirming this structure as demand. So a drop in pop over a few sessions under the point of control, and then a drop in pop in today's or Friday session, also at that major level, affirming the structure as demand. As long as we're holding over 217.38, these buyers should be trying to get to 222.28 next. And that is pretty much it for the IWM. Moving on to the dollar here. So, whoops, this is not correct. Moving on to the dollar here. So, if you'll recall, this trade zone was designed around this guy. Oops. Designed around this guy, this area of demand, which has contained price ever since 2023, and then this supply, which has contained price ever since 2022. This trade zone that we created a few weeks ago, which is based on the potential of this area of change to not be negated. Pretty much every single trade that I take is based on an area of change, because we never know what will happen. We never get to know what's going to happen. We don't know what the market will do. But what we do know is where there are significant areas of change. And so if we always take trade where those areas of change are, then we have a slight edge there, right? Because the market has already told us in the past, hey, listen, this guy is important, just like over here, right? Just like over here, just like over here, and over here. And so lo and behold, right now it's being important over there yet again. So all of this price action within these two key structures, within under this supply and over this demand, it's much trickier to take trade in here, right? But when the market has already told you, hey, listen, we care about this guy, we care about this guy, well, then obviously it's cheapest to find out whether or not that market will remain holding those structures at those locations, right? At the location of those structures, you know? So we never know what's going to happen. We can only decide where we would take action and why. Right, so we didn't know that this was going to be an effective trade zone. Obviously, now in hindsight, we do know that. Whether or not it was going to work, we don't get to know that, but this was very good R to see if these buyers would continue to do what they have done for many years now. And now that we have made our way back over this daily breakdown, 101.965, this is increasing the potential that these buyers will make an attempt at testing this key supply from 2022 all the way up at 106.335 is the point of control of that structure. So that's pretty much it. If you have no position right now, ideally what you'll wait for then is a move that trades much higher, like allows some more follow through over this 102.145 level before looking for backtest plays, looking for plays off of this demand zone to hold. As long as we're holding over this guy, the odds of us coming back over here are good, just like what happened over here, test over here. Make sense? So that's pretty much it for the dollar here. I think we skipped the Dow, so give me a second here. So the Dow is still very healthy as well. It's pretty much like the SPY, right? It even looks better than the SPY because these sellers have not been able to come even close to back testing the breakout point 416.55, whereas in the SPY you did come back down and get very close to testing it. So this consolidation is still very healthy. That being said, I would still prefer to take trade down here because there's just a lot more value that was created here. It's kind of a low volume area over here. So if sellers were to drill into this low volume area, here is where the last area of major value was established. So if we don't get this trade zone here and they break out from here, that's fine. We'll just adjust our zones a little bit higher based off of the new area of change, you know? So that's pretty much it for the Dow. Moving on to the VIX. So the VIX, you know, we are still seeing an elevated volatility. And you can see that in the futures contracts, like the risk is a little bit more on these lower time frame setups. But I guess that's irrelevant to this video. Anyway, yeah, so remember, I'm watching this 1544 level, right? As long as we're under that 1544 level, then, you know, it's pretty much the same environment from a volatility perspective as off the October 2023 low. So you can see now that we have made multiple lows off of that 1544 level, meaning that we're still seeing this sustained elevated volatility relative to that October low, which was pretty much just a grindy melt up kind of a move on the SPX, right? So that October low is all the way back here. Nope, it's even further back over here. Okay, so we're in a higher volatility environment, which again, you can see that, right? Because for much of this way up, you didn't really have major declines, whereas, you know, this was a very major decline. And ever since here, I think is when things started to shift, July 17th. July, yep, right around here is when the volatility shifted, and now we've pretty much stayed in this slightly higher volatility environment, but you know, it's really still not that much volatility. So that's pretty much it in the VIX. Moving on to NVDA. So obviously we would prefer if semis were leading on the way up, and they're not exactly doing that. Tech didn't even really lead on the way up on this bounce, especially, you know, again, because QQQ still has some overhead supply. So not the best case scenario for the market, but we are still seeing that rotation where you have XLV still just back testing this area of demand. Low of the day Friday was made right off the value area high. And then of course XLF is still showing you a lot of strength, flirting with an all-time high breakout. So even though the Qs aren't leading the way right now, if the Qs can stay relatively strong, or I mean reasonably strong, I should say, while XLV and XLF continue to, or rather XLF continues to stay strong, well then, you know, this bullish rotation in the market will continue to shake out. So that's pretty much what we're looking out for, or continuing to look out for, regarding these individual tech names. If they can just stay strong, or rather stay sideways, while XLV, XLF, these other sectors have a go at it, then that's pretty much the best case scenario for these buyers. So the fact that NVDA is continuing to hold over this big old demand zone and is still pretty close to its highs, I think it bodes well for the rotation in the market, right? If all of this price action was occurring under this demand zone, then we would feel less good about the bullish rotation occurring in XLV and XLF. All right, so that's pretty much it for NVDA. I don't really care to take any trade within all of this balance here unless we're at the extremes of the range. So I would prefer to be looking for more plays off of this guy, looking for extension, testing this demand zone. Whether or not it comes, we have no idea, but it's not going to be that big of a deal if it doesn't come back down here, because if we do break out of here with some follow through, then we can be looking for back test plays off of this guy, just like back test plays off of this guy over here on this move was very reasonable. If we don't get another shot over here and then we just break out, we're still going to be able to set up trades around this structure over here. Okay, so that's pretty much it. Apologies for the mess. This is all cat stuff behind me. So just realized it looks kind of janky back there. I can't really see him, but he's hanging out in there, and all of these are just like ramps so that he doesn't have to jump while going up to the windowsill or up onto the couch, because he just got fixed. I don't know why they call it that. He got neutered. Anyways, Bitcoin daily lower high is on deck. Anything under 66550 is going to be good for one. It's all about 62380.55. That's his prior low in the short term. These buyers have to get back over 62380.55 in order to negate the change of this breakdown. I think it's very notable that these sellers have broken under the point of control of 61003.36. That's just the POC of this prior all-time high structure here, and that's weird. I thought I had locked this in place. I guess I locked it in place at the wrong place. Okay, so 61003.36 is that key point of control. And that prior all-time high structure is being affirmed as demand as long as we're holding over 61003.36. So after taking out the point of control, the next objective for the sellers was this value area low. So it's notable that they failed to come down there and then move back over the point of control, but like I said, it's all about this guy in the short term. Got to find acceptance over 62380.55 in order to negate the change of this breakdown. And if they can find acceptance over that level, eyes on the value area high of that structure, 64489.08. I don't really care to do anything Bitcoin either in all of this chop. It's similar to NVDA, where I would only really look for buys off of this guy. I don't even really care for sells. Like, you can be looking for responsive trade as a seller off of this all-time high structure has led to some pretty good declines. But bigger picture, knowing that the chart looks like this is the monthly chart looking for a higher low. The weekly chart, while it is trading sideways, pretty much held this back test nearly perfectly. So bigger picture, these buyers look fine. It's just in a holding pattern. So I prefer to be on the buy side, but I don't want to be a buyer in the middle of this range. I prefer to be a buyer at the lows of this range, because as long as we're range bound, that's just where the better value plays are. All right. Moving on to Ethereum. So Ethereum, this setup was from 2 weeks ago, I believe. Looking for the potential of a rejection from this big old block of supply. So if you took that trade setup, then Obviously, you want to walk your stop down for any remaining position. You should have chopped it up no later than a test of this value area low, right? Because remember, this trade was based on the potential that we would reject from this supply, which is pretty much the same as rejecting from the value area high of this reference point over here, this guy over here, right? And so if that's going to be the case and we're going to reject from this area, then the next objective should be this value area low. So what I suggest for Ethereum traders is to just walk your stop down for any remaining position, chop it up over here. So then that R was going to be already like 7R. I would just do it like that because you're probably looking at more sideways trade here. Like even though this trade zone has shaken out for a seller right now, looking for that weekly lower high to be set, which it has been set, we still are just trading sideways right now. It's a battle between this area of supply and this area of demand. So we could very easily hold the lows of this sideways trade here and then come revisit these highs. And obviously, you don't want to get turn a winner into a loser. And so, it's very reasonable to continue to see back and forth and trading here. So again, I would just book those profits, throw your stop over the local high for any remaining position, chop it up again at the lows of over here, and then don't walk that stop unless you break down from this low, create more sideways like this. So again, look for another chop over here if the market will give it to you, and then for the rest of the position, don't touch it until this occurs. If this occurs, we would create some more balance and then break down again. Okay, fine. Then you can walk your stop down to over here. Okay, so that's pretty much it for Ethereum. CCJ. So for CCJ here, it's super strong. I was hoping for a backtest of this area of demand over here. It's a whole lot of demand that was established. It's also roughly the value area low of this big structure over here. So that's what I was hoping to get done, but obviously as of right now, it's looking like we might not get that opportunity. If it doesn't come, that's fine, but I do think that at this point now, this is enough follow through over this local demand zone. Maybe we could be looking for pullback entries, like something along these lines over here. Something along these lines, looking for a back test of this area that they just broke out of. Technically now this is the daily no change level here. If these sellers can't get back under 44.45, then they don't negate the change of this breakout. So I would just look for some a play like this, looking for a back test of this major point of control, which is also a back test of this local daily demand zone. All right, that's really it for CCJ. And then finally for MSOs, really not much is happening. All of this choppiness back and forth trade has really just been the buyers doing their best to defend against the breakdown of this black dirt breakdown structure. So this is the structure sitting pretty much at all-time lows. It's do or die here, right? Obviously, if you take out this low, you find acceptance under it, well, then you're looking at new record lows. But as long as you're holding over this guy, then they should be trying to get over here. So I continue to maintain that this is a very reasonable location, but you do want to be waiting for there to be extension when you're using these trade zones that are shared with you every week. So still just didn't even get to our first target. So it came into the trade zone, but continues to miss getting to the first target, which is just slightly under 8.32, because again, that's the level that these buyers need to find acceptance back over to negate the change of this breakdown. So that's pretty much it. I kind of forgot here to prepare something for show and tell, but off the top of my head, recently COPX is one of our swing report picks, and I did do a live trade, but I only got one position, but it looked like this. Give me a second here. Let's see. So grab the starter. So on September 3rd, it was oversold conditions. That was September 3rd. So it was somewhere in here, I believe, somewhere off of this value area low. Let you guys know, hey, listen, I'm starting this trade idea. I put it on now. I had another fill looking to get just a penny off of this low, which was, I guess, not the smartest thing for me to do, but it's like a meme thing that I do. It's just, I guess, for fun. I like to use 8s, and so I had it at 38.18, and so I missed that second fill. No biggie. The way that I like to operate is, I don't prioritize trying to get full size. I don't care about that. What I do care about is never taking any drawdown. I prefer, because if I don't take, or if I minimize the drawdown that I take, for me, I find that to be very beneficial, because then psychologically it's much easier to handle all these trades. So additionally, because I plan for the swing report plays, I plan half of my risk capital for buying weakness, and then I plan half of the risk capital to adding to the trade once it gets going. And so if I don't get to the full allocation for buying the weakness, I can just use that risk capital going forward for the ad. And then because the ad is very often a lower time frame setup, typically it has even better R than what these setups are shared. This is 6% risk. If I'm going for an ad on like a day time frame setup or session to session setup, it's usually like 1 to 2 points of risk. So you're looking at like a significant decline of risk, which then allows you to size up with any remaining risk capital that you have. And so that is shaking out pretty well. I like to do it this way. I think it's been a very good adjustment. So just a little bit show and tell for what you can expect in the swing report. Not only will you get these trade zones shared with you every single week, at least two novel ideas every single week, but if I take any of these trades, then I will also push out these alerts to let you know exactly what I'm doing. Okay, so that is pretty much it. I appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. We very much appreciate your patience while half of our team is down and out in Asheville. And I do apologize for not having a video last week. I was also down in Asheville for our meetup and spent the weekend chopping up trees with the neighbors. I met no one in the community. I only met Joey's neighbors, Punk's neighbors. Anyway, so that's pretty much it. Again, I appreciate your time. Thanks for sharing some of your time and energy with me, and I hope you enjoy the rest of your weekend, and I hope to see y'all next time. Farewell.